Good afternoon and welcome to the EKF Diagnostics Holdings PLC Interim Results Investor Presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged, can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Just click Q&A, scroll to the bottom, type your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company review all questions submitted today and will publish responses where it's appropriate to do so. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Julian Baines, Executive Chairman. Good afternoon.
Good afternoon, everyone. Thank you very much for joining the EKF presentation. Before we start the presentation, I personally would like to apologise a little bit for the confusion and the messaging over the last 12 months. It's been 12 difficult months for EKF, where we've lost 2 exec directors. There have been delays in South Bend in building the fermentation facility. And so what I hope to show you today, and then we've had to rebase the figures based on information that I have uncovered over the last 3 to 4 months. So what I'm going to try to show you today is where EKF is today, how simple the new story is, how we've, Stephen and I, the new CFO, have simplified the story, simplified the outlook, and put figures out there into the market that we are very, very confident that we can deliver moving forward, rather than figures that over the last couple of years have been difficult to achieve. So I just want to thank you for your patience with EKF, and I think what I will show you today is a really bright future for a company that was always had a very, very strong core business that has had an exceptional performance in the first half of the year, but unfortunately that's been clouded by issues in South Bend and obviously other issues with regards to the new exec team. What I can say to you all as shareholders, I am now fully committed to this business and will be ensuring that the delivery that I will outline and talk about today will be achieved, and it will be achieved over the next 12 to 18 months. And because of the patience of everyone, resetting the figures to targets that are ultimately achievable for a business like this, I feel extremely confident that moving forward we will deliver what you expect from a company like EKF. Oh, sorry. Sorry. So the strategy of the business, I've done my best now to really simplify EKF for everybody. So we have just 4 areas now that we are going to be focusing on as a business for the future. These 4 areas are our high margin, high revenue opportunities. So the number 1 in that is, of course, BHB. For those of you who do not know what beta hydroxybutyrate is, it's a measure for diagnosing ketoacidosis in people with diabetes, and it's a business for us that now has revenues of around 12 to 14 million pounds per annum at a 75 to 80% margin. That is a very, very important product for us. It's made out in Elkhart, Indiana, which will move eventually to South Bend, but that will be our very first focus. Our second focus, all these are equal, by the way, sorry. Our second focus will be on hemoglobin testing. The reason for this is that we're number 2 in the world at the moment, but we have seen in our DiaSpec TM, which is the little blue device in that picture, we've seen with DiaSpec TM a 45% year-on-year growth in that business. We've invested in it this year so that we will no longer be outsourcing cuvette manufacture. We will be manufacturing it in Barleben in our German facility from January next year. All of that is online to be delivered, which will have a very strong positive impact in our margin for that product. The red product, which is HemaControl, is you'll notice it had a slight decline in revenues this year, but that was down to what we sell into Peru. So Diagnostica Peruana, they have revenues of around 2 million a year for testing for malnutrition in children in Peru, but there was some political turmoil earlier in this year, and we didn't actually start selling into Peru until April, May of this year, but that has picked up to a very high level. But the important thing about that is that for years now, we have been supplying them what's called single pack cuvettes. So normally the cuvettes that we test, they come in tubes of 50 cuvettes. we've been supplying Peru single packed ones, but because of the nature of how we manufacture it, we can only make 15,000 a month. However, we've just completed installing an automated line so that we can manufacture at least double that single pack cuvettes, which give us opportunities outside of Peru in remote places in Africa, India, etc., etc. And why is this important? Well, a pack of 50 cuvettes, when you send it to a remote area of Peru, they're never going to do 50 tests, and they find that they waste between 35 and 40 cuvettes out of every pack. So that's why they wanted one cuvette at a time. HemaQ have no capability of doing this, so this for me will give us another competitive advantage with HemaControl in the hemoglobin market. And then we have our diabetes products, QuoTest and QuoLab. They grew at 18 and 24% respectively. Still got very strong demand out there in the emerging markets, which is the main area in which we sell that. And then naturally, I will talk later that the fourth area of real focus for me is the fermentation enzyme capability in South Bend. So over the years, so for those of you who have followed EKF, we've always had four areas within the business. Now we've cut it down to just two. We are only going to be talking about point of care and life sciences. The point of care, just to cover what I've just said, is the hematology and diabetes business as a whole, 16.6 million revenue in the first half, which is 61% of our overall revenue. But there is a huge opportunity for growth, as unfortunately as healthcare declines, there's an increase in frequency of testing, certainly in malnutrition in poorer countries, but also we've seen a large increase in blood bank testing globally. So if you have to go and give blood, you have to have a hematology test to give blood. So we have seen that we are taking market share in that area, mainly through Fresenius Kabi, but also through our own distributors, certainly in India and in Asia Pacific. So we do see this as a big growth area for us. And obviously diabetes is a very large growth area, and we're seeing expansion in that. Both, don't forget, BHB is also a diabetes product, even though it's under life sciences, but also our QuoTest and QuoLab. With regards to specialist enzymes, just to remind everyone, in Elkhart, Indiana, we also manufacture BHB, but also products such as salicylate and acetaminophen for Roche, products for Sekisui, and our aim is over the next 6 to 9 months will be to close down our Elkhart facility and move this all into our South Bend facility, making it a Rolls-Royce facility for all enzyme manufacture that we do there, plus all the new applications that we are bringing on, hopefully this year and next year. So operational highlights. What is slightly frustrating for me now in the position I'm in, we've had the best revenue half we've ever had in the history of the company at 26.9, excluding COVID. I mean, just core business. Best revenue we've ever had at 26.9 million. But our adjusted EBITDA has fallen to 4.4 million. And that is for many reasons. One is that our cost base is far too high. We are working very hard to reduce that cost base, which I'll talk about a little bit later. We have identified a number of areas. That cost base increase has been caused by wage inflation, part of that to do with the pandemic. It's been caused by raw material cost increases and utility cost increases. We have a defined strategy to reduce the certainly the salary perspective within the business, but also in terms of the raw material costs. There's not a lot we can do about utility costs. But we are at the moment, in 2019, we had a margin of around 53.8%. At the moment, it's around 44%. And Steve, who's only been with us a month or so, but we're identifying a number of areas where we can improve the margin. Some of it is operational, of course, as I mentioned, bringing the DiaSpec TM into under our control, closing Elkhart, etc., etc. So some of it is in our control, and others we're going to directly target areas where we know that we can reduce the expenditure. We've shown life sciences showing 13.6% growth. And then South Bend I will talk about South Bend at the next slide, but South Bend, all its quality management audits, which we've talked about before, has been completed. As I mentioned at the beginning, I am now fully committed to this business to deliver on all the things I'm talking about today. One thing that we are looking at is, in terms of increasing margin, our clinical chemistry business in general is a loss-making business, and we're looking at these non-profit making business units and making decisions over the next 6 to 9 months with regards to those. The reason it takes that long is as a business like ours cannot just close these businesses. You've got to give the customer 6 to 9 months to find alternative sources. But we will be very much focused, and I'll repeat this throughout this presentation, very much focused on the 4 areas I mentioned at the beginning of the presentation. So I won't dwell on this slide purely because it's quite obvious, but we're going to be investing in reviewing the cost base, making sure across the entire business, focusing on internal and external expenditure. We have found costs in a lot of areas with regards to expenses have gone up, doubled in some cases to where we were in 2019. We'll be making sure that they will be looked at and reduced. Looking at reviewing resources related costs, focusing on improving raw materials, all of this I've mentioned, and making sure that what Mark started as a business is continued in terms of improving our processes and systems to support the growth that we're aiming to do, as well as mentioning investing in single pack cuvettes and manufacturing. We're going to optimize efficiencies by removing low margin, loss making products, legacy products that we've had, some of them since the 60s, believe it or not. We're going to continue to invest and grow the form and functionality of our existing point of care portfolio. We're not looking to expand that portfolio because we're in such a strong position with the products we have. We're just looking to continuously review and improve those products. One thing that's important about life sciences, if we end up transferring the Alcard products into South Bend, one area that will be of great benefit is, for example, if we manufacture enzymes for Roche, at the moment we do 5 or 6 runs per annum. Because we've only got limited size fermenters in Alcard, if we move to South Bend with a much larger fermenters, we probably only need to do 1 or 2 runs per year, which will massively increase the margins for us as a business. And we're looking to review that across all our enzyme capabilities. And we're going to review all current partnership agreements going forward to make sure it's aligned with where we want to be and where we're going. That includes distribution. So South Bend update. I think that there's been a lot of concern and confusion about the continued delays about South Bend. So I hopefully can put clarity around this. So fundamentally, the installation has taken a lot longer than we thought. And one of the reasons for the trading update 2 weeks ago was that even though all the fermenters are now installed in South Bend, all of them need to go through a 6-week verification and validation process. Every one of you on this call has the right to say, I thought you said that they could be done individually, one by one, and then you could bring in revenues for each one as they are validated and verified. Since talking in great detail with the team in South Bend, it is not the practical way to do it. The practical way to do it is to qualify all the fermenters at once over a 6-week period, so ensuring that they're all aligned. So I made the decision that we will do that over this next 6 weeks, and we will not have any revenues, or I've announced that we would not likely have any revenues this year out of South Bend, which I know was disappointing to everybody. However, we have received our first order for South Bend, which will be done this year. So Slight positive news is that we'll do revenues of around £250,000 out of South Bend, but of course that's nowhere near the 3 to 5 million that was expected. But hopefully I've explained there that we need to do this properly, we need to do this right. I've rebased the numbers so that we run the business correctly and not just chasing revenues and EBITDA. It has to be done properly, it has to be done correctly, and that's what we're doing, and we're making sure that we deliver on this facility. We can also do at least 75 to 80 fermentation runs per annum, which, dependent on the product, if it's enzymes where you have purification at the end, this could lead to 14 to 20 million dollars of revenue. But we've only forecast 3 million next year, because again, I am being much more cautious about our approach to this, because one of the issues we've also had is that initially we were saying we could be all things to all men. Basically, we could do anything from food enzymes, industrial enzymes, agricultural enzymes. But the real reason for building this facility was for pharmaceutical and diagnostic enzymes. And that's where I want to focus, because A, that's where our expertise is, and secondly, that's where the margin is. So we will be really focusing on those two areas. The other issue we would have had if we went on to do all the other areas, it mentions downstream processing here. The downstream processing and purification for food enzymes is vastly different to pharmaceutical and diagnostic enzymes, and would have cost more. And the margins in, for example, food and agriculture are a lot lower. So I've again made sure that we focus and deliver on the areas of fermentation, which brings us the best margin, where we have the best expertise. And as I mentioned there, we got our first customer secured, and that will be manufactured this year. So point of care performance, 9.9% growth versus H1 2022. But the asterisk shows you this includes central laboratory. If we didn't have central laboratory in this figure, the growth would have been more like 14%. So it gives you an idea why we're looking in great detail at the low margin or negative margin businesses within the portfolio and focusing on high margin. Our DiaSpec's grown by 45%. It is the best hemoglobin meter in the market. We're taking a lot of market share. We work alongside McKesson, Fresenius, because I think also people have forgotten that we deal with Roche, McKesson, Fresenius, Fisher, Cardinal. Some of our customers are long-standing, very large businesses. I talked about HemoControl in Peru, but that's all back online, so you'll see a positive percentage growth in H2, and QuoLab and QuoTest are growing at double-digit growth. Historically, again, people who followed EKF, I've always said that point of care will grow at 6% per annum, but you can see from just those three products, we are continuously now delivering double-digit growth. And for next year, we've only forecast 6% growth again. So again, being very cautious in our approach to make sure that we deliver for shareholders. Life Sciences performance shows 13.6% growth versus the same period. It excludes contract manufacturing now because that was mainly COVID related, and hopefully I don't have to talk about COVID anymore. The growth has been mostly driven by sales of beta hydroxybutyrate at 27% growth in that product to deliver the 13.6% growth in the business. Development of South Bend will lead to greater reduction in fermentation costs, which I've already mentioned 2 slides ago. And we are now focusing on delivering these new customers into South Bend next year, as well as existing customers, to create a site that becomes very high tech, but also very high margin business. I'll hand over to Steve now to give. Oh no, you haven't got in front. No, don't worry. So the financial, I can do this, Steve. So the financial highlights. Revenue from continuing operations of 26.9 million compared to 37.5 million last year, but that obviously included COVID. Revenue growth in continuing operations, so therefore like for like in a core business, is 6.8%. as I mentioned, the EBITDA figure we are looking and focusing on very much for next year of 4.4 million, gross profit of 11.8. The margin of 44% slightly improved. It isn't good enough. I'm going to say that now. It isn't good enough. 4 years ago, we had 53.8% margin. Steve and I'm not going to say we're going to deliver that next year. That would be ridiculous, but we will be focusing over the next 2 to 3 years to get back to that level of margin that we used to have before the pandemic. Net cash. This is important because I know people are concerned about the cash balance within EKF. In the end of June, we had a cash balance of 9.2 million. At the end of September, we'll have a cash balance of 9.1 million. So our cash generation, despite the outgoings, has been very, very strong. And we are now getting cash out of Russia. So it's not a lot. We can get 100,000 euros a month dividend paid out of Russia, of which we receive 60,000, because if you remember, we only own 60% of the Russian facility. So the other 40,000 goes to the shareholders in Russia. Our current cash balance in Russia is 1.9 million, down from 2.4. So things are improving from the Russian perspective, but that 9.2 million excludes the Russian money. So we are paying the dividend at the end of this year, and we would expect our end of year cash to be around 2.4 million. But we do have a facility in place, 2 facilities in place of 6 million, 3 million asset loan, and then 3 million with HSBC, which I only just have to sign the agreement, and then we'll have that 3 million in place for. So we're very secure moving forward with regards to operational cash, etc.
Steve's got the presentation.
Yeah, so Steve, you can go. You just talk, go chat away, Steve. So the financial.
Apologies if you can't see me, but yeah,
it's a good thing.
Yeah.
Anyway,
in terms of if you're looking at financial performance, the chart on page 12 of the presentation, which I believe is the one, which is up, is it? Yeah. Sorry, if you look at the performance of the individual business units, as Julian's touched on already, you can see point of care 16.6 million compared to 15.1 last year. Again, life sciences split into BHB and fermentation and other COVID-related items, which you can see with a big drop-off has come there, because in terms of the life sciences side, other as well, you can see with the big drop came there because it was COVID-related, and it includes, from 2022, it included some shipping and material for US inventory related to COVID. So you can see the total group revenues 26.9 compared to 37.5 compared to 2022. But if you turn to the next slide, that probably gives you a little bit more of a sort of a comparison of where we are in terms of revenue, gross profit, gross margin, overheads and operating profit and adjusted EBITDA. And it follows on from what Julian said, really, in terms of, you'll see we've put 2019 in there for illustration to show where the core business was in the first half of 2019 at 21.4 million, and where really the core business is in the first half of 2023 at 26.8 million. There are a few differences due to some COVID-related work, but the majority of it is really comparing like for like. You can see the gross profit percentage. The value hasn't gone up that much, and the percentage has dropped significantly from 53.8 down to 44. And you can see the overheads themselves have also increased from roughly around 9 million to 11.9 million, which then has the knock-on effect of impacting the overall EBITDA number. And you can see the EBITDA on 21 million turnover in 19, it was 5.5, and 26, high 26 in 23, it was 4.4. So the cost base has risen during that. There has been margin erosion for obvious reasons in terms of material pricing, wage inflation and things like that. But the cost base in general has increased as well, and we'll be targeting that moving forward to reduce the cost base moving forward, to try and get the margin back up by looking at margin improvement of the product, but also looking at where are we spending some of those overheads on, can they be reduced and improved upon moving forward.
So in summary, I believe, unless I'm wrong, we have simplified the story. We've realigned the business back to where we were pre the pandemic. We've taken out all the headaches and the smoke and mirrors that we've had to put up with. And again, I apologize for this over the last 2 years. And I feel very, very much happier that we have a real line of sight for growth over the next 2 to 3 years. And I'd much rather be in a position that we were in 17 to 19 of delivering to shareholders rather than constantly defending. So I'm extremely happy with the progress that we're making, but there's a long, long way to go, and the delivery is only just beginning. We have a huge amount to do and a huge amount to achieve as a business. As I mentioned, and I will keep saying this, we're focused on high margin products and services. So enzyme fermentation, BHB, hematology, and diabetes. And now I would like to hang back to Paul.
Fantastic. Look, thank you very much indeed for the presentation. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated in the right-hand corner of your screen. Just while the team take a few minutes to read those questions, just while they take a moment to review those questions, a copy of the slides and the published Q&A can be accessed via your investor dashboard. I'd now like to hand you over to Paul McManus to host the Q&A. Paul, as you can see, we've had a number of questions both pre-submitted and throughout today's presentation. Could I please just ask you to read out the question where appropriate to do so, and we'll pick up from you at the end. Just pop your camera up, Julian.
Thank you. We'll start with some of the pre-submitted questions, Julian and Steve. The first is, it appears you have some difficulty in managing the program to expand the enzyme business. While all of the change throws up challenges, this is not high up on the complexity scale. What plans do you have to ensure that your latest plans are executed to time and without further cost? Delays cost money, as we see from the reducing cash balance.
I would answer that question in 2 areas. We have had difficulty in managing the program for a number of reasons. One is we've had delays in delivery of some fermenters. We should have employed more than one project manager to manage this. We've had issues in terms of the pandemic and building work, fit out, plumbing. So the managing of the program, I think that we've had difficulty is a fair comment, but I think that all the fermenters are now in. I admit totally that they're late, but the fermenters are in, everything, the building works are done. We've started the verification and validation, which will be done by October the 25th. There is still risk there in terms of if the V&V fails, but we don't think that is very likely, but there's still risk there. I don't agree, if you don't mind me saying, that this is not high up on the complexity scale. This has been the biggest program that EKF has ever ventured on, certainly the highest in terms of investment, but it's been an incredibly complex installation, because we've wanted to make sure that each fermenter had its own clean room so that we could do different fermentations at different times. It's been a hugely complex project. So I don't agree that it's not high in complexity. It has been, and you will find that most fermentation companies, it's a complex process, certainly putting in the downstream processing, the purification, as well as the fermenters. So that has been difficult. What plans do you have to ensure your latest plans are executed? Well, we're in validation and verification now. We're aiming to open the facility fully on October the 25th. And I agree, delays cost money, but also I announced that we wouldn't have any revenues this year. I now believe that we will do $250,000 worth of enzyme fermentation in the final quarter of this year. And so I think that the plans are well on the way to being executed. But, I'm looking forward to announcing at the end of October that it's all complete and we're ready to make the way forward.
One of the other questions was asked about future dividend policy and what future considerations might be for interims. I will have to apologise, I think, to whoever submitted that, because I don't think it will be appropriate for you to give any forward-looking statements on dividend policy outside of an RNS, so you wouldn't be able to answer that question. The next one is about what is the current position in terms of EKF's portfolio being compliant with IVDR, and with some professionals already starting to notice products coming off the shelf as a result of the complexities of complying with these new regulations. Does this present EKF with enhanced opportunities?
Yeah, yes is the answer to that. Next, no, I'm joking. That was being facetious, apologise. But we have all our major 4 products, Diaspec TM, Hemocontrol, QuoLab and QuoTest are all well down the routes of IVDR. I find IVDR is very detrimental to the diagnostic market because small companies just cannot afford to implement IVDR. It in many cases is a ludicrous regulation. However, it's a very fair question. For companies like ours, it does enhance our opportunities with regards to obtaining IVDR. We're just waiting to be audited, but there's numerous issues with that. There's just been nothing but problems with it, but it will give us enhanced opportunities, certainly in Western markets where companies can't compete with regards to IVDR. So, but I would still say they keep on putting back the expectation date of when you need to get IVDR approval. It'll be over time, but I'm pretty sure it'll be beneficial to us. And unfortunately, a lot of products are coming off the shelf because companies are not bothering with it, and they'd rather go through FDA. And I find that astonishing that everyone would rather do FDA than IVDR.
On the question of recruiting a new chief exec, has this been temporarily suspended as opposed to terminated? And has the process to date yielded any suitable candidates?
It hasn't been temporarily suspended. It is being terminated. I am staying now as fundamentally the CEO. I've committed to the board that I will see this growth and delivery through the next however long, 2 years. So no longer am I looking to step down at the end of January, and I owe it to not just myself, but to you as shareholders, to Christopher Mills, who's been incredibly supportive of the business and of me. And it's been a difficult, very, very difficult time where we thought we had a solution. And now one thing that's very important for people to know is that I worked with Steve back in my BVI days. We worked together for 7 years. And so bringing Steve in has really helped me in terms of putting a strategic focus on the business and looking at where we should be driving the business. We've worked very closely together in the past, and and what that's done for the staff got very, very, they're incredibly good team of people we have at EKF, and they got very nervous when the CEO and CFO stood down, because that gave them a sense of, what's wrong really. And there was nothing wrong, but I think that Steve coming on board alongside myself and committing properly to the business has steadied the ship. And I had a number of people over from the US and Germany, and we had a very, very strong outlook on the next year or two. So hopefully that answers the question. For now, it's me and Steve driving the business forward.
2 parts to this question. One was, does EKF have strategic plans in place for a US listing? And the second part, I think you probably have already answered, but does that have an impact has that had an impact on the recruitment of the CEO?
We're too small. Looking at my experience of my limited experience of Renalytics with NASDAQ, we're way too small at the moment to list in the US. I understand the question, and it's a reasonable question with markets so poor in the UK at the moment and AIM suffering the way it is. But I think that AIM is the right market for EKF, because we'll be one of the few businesses, I believe, on that market that is cash generative, operationally profitable, and is a really good, solid business. And I don't think in diagnostics there's anything quite like EKF on AIM. So we will be staying on AIM. So therefore the CEO question answers itself.
Given the recent increase in COVID surveillance testing, what's the situation in terms of demand and that of EKF's current COVID-related inventory?
Very, very limited. PCR testing is around and about, but it's still in very, very small numbers. This new variant of COVID has caused quite a lot of illness, but there doesn't seem to be that much increase in testing with PCR. So don't forget, we're not a lateral flow testing business. We supplied MTM. Also, I have to be honest, it's a very good question about the inventory, and naturally we'll try and get our inventory reduced wherever possible. But I want to make it clear that I think COVID, in hindsight, has been quite damaging to EKF, and so we have no wish moving forward to be involved in any form of COVID testing or anything else of that nature.
What is the current operational position of the new Leipzig facility?
Can I cut across that?
Yeah.
There is no new Leipzig facility.
Right.
I canned the project. The reason being is that, as I said at the beginning of the meeting, it would be margin-wise, it would be far, far more beneficial to move Diaspect TM cuvette manufacturing to Barleben alongside our HEMA control. So all we're doing at the moment in Leipzig is staying in the old, very low-cost facility, producing the lactate product, but it won't be a core focus for us. But it is a revenue generator and does give us margin. But that's all we're doing. So we're no longer doing anything in Leipzig.
Going back to enzyme fermentation, have the delays in the validation of your increased capacity impacted the onboarding processes and therefore affected the relationships with customers that EKF already have established relationships with and who were well advanced in the process of transferring to EKF for enzyme contract manufacturing services?
With our existing customers, it's had zero impact. I think I understand the question, but just to split it down into 2 or 3 points, for existing customers, it has zero impact because we've been making the enzymes out of L-card and will continue to until we can transfer over. For customers that were looking to come on board with EKF, as I mentioned earlier, one of those has signed an order which could be very beneficial to us next year because this is just first phase, the $250,000. Some of the other customers I have chosen to not pursue because they were in food, enzymes, or agricultural, which isn't our expertise. We're now focusing a lot more on pharma and diagnostic enzymes. So the straight answer to that is some customers have fallen away where we would have had to spend a lot of money putting in different downstream processing, but we're now very focused on the 4 or 5 customers that we are looking to bring on board next year. And as I mentioned, we've only put in our forecast for next year 3 million, and I think that is a very, very reasonable target to achieve.
Given the advantages of CRISPR-based diagnostics, clustered regulatory interspace short palindromic repeats,
Thank you, Paul.
diagnostics, and the potential to revolutionize the field of diagnostics, can you elaborate on the opportunity from the manufacturer of CRISPR enzymes for molecular diagnostics? To what degree will EKF branded molecular diagnostics products impact EKF's diagnostics portfolio in terms of product development and opportunity?
With regards to advancing CRISPR-based enzymes, we have not made progress in that area because as a board, we have decided to focus on the pharma and diagnostic enzymes in which we have a significant amount of experience. Strategically, this question is really important. I want to get South Bend up and running over the next year before we start to look at R&D of our own enzymes. But a natural progression for this company is to develop the next BHB or the next CRISPR or whatever specialist enzyme that we should be developing. But in the short to medium term, and I'm talking the next 12 months, I want to get South Bend bedded down, delivering the revenues, delivering the margins and profitability that we've promised for too long to shareholders. So that's where my focus will be. And these types of enzymes will have to wait until we're at a point where we feel we're back in the position to deliver on them.
Could you elaborate further on the degree of likely improvements from the Diaspect manufacturing initiatives?
The biggest one will be volume and margin. So we'll be able to double our volume, and the margin should increase pretty significantly. We should be able to bring down the cost per test by 10 to 20% at least. So that's the main benefit of doing it.
A question about point of care. I note that the point of care growth initiatives The majority of point of care sales come from recurring revenues from consumables. The installed point of care base appears to be relatively static. Are there any specific initiatives to grow point of care installed base of instruments from existing and new, including geographically, therefore further enhancing the opportunities from the investments made in manufacturing?
I'm going to need to come back to that question, and the reason I say it is I don't agree. I think that we are installing more, and just based on our inventory and sales of instruments, you will always have in point of care a third instruments, 2/3 tests. That's a very broad average, but that's how it works. I would need to come back to see, because I don't think they're relatively static. Certainly the DiaSpect TM is not static. And definitely not QuoTest and QuoLab this year. So I'll need to check. The one thing that could be static is Biosen, but that's because we sell Biosen into Russia. And it's our biggest market, and we cannot sell Biosen into Russia anymore because it has optics in the instrument, and you can't sell a product into Russia anymore that's got optics within it. But we do sell the tests, and we've been selling into Russia since 1989. And so therefore we still sell around £3 million worth of tests into Russia, but no instruments.
Where does Asia fit in terms of point of care growth potential, particularly with regard to haematology and diabetes? And does India in particular form part of any EKF growth initiatives?
We sell a lot into India already, and we continue to do that. The most successful product in India by far is the DiaSpect TM, because the cuvette cost is very low. And it also works in extremely high temperatures. So we do sell a lot into India. We're always faced with the margin consideration because it's an extremely competitive market. It's an extremely low-cost market. But we are seeing continuous growth in EMA and APAC, where we do focus our attentions a lot, certainly in point of care.
Does the further expenditure in life sciences in South Bend that are planned for the second half of the year also address the greater customer needs for downstream processing that became apparent?
Yes, they do, and that's a very fair question. That's why part of the delay has been in place, and why the cost overrun has happened is mainly to do with downstream processing.
So a question just on the updates that you put out up to 26th of July. You're told about the good progress being made in the project to increase fermentation capacity, and that units would have been operational and generating revenue by 2023. Then in the 12th of September statement, you announced program delays, withdrew all guidance for full year 2023. Well, I think you need to address that because you did provide guidance in your update, but this is how the question reads. 3 related questions to that. Why were there these problems not identified earlier? What is the management doing to strengthen the team on the ground delivering the project and make sure that there's better communication? And what's the expected further CapEx expenditure to complete the project? How much in total will it cost? So I don't know if you just want to quickly remind people that you provided guidance for full year 23 revenues. It was 53 million. And
I provided the guidance of 53 million and 10 million EBITDA.
But I suspect what they're saying was that you withdrew any expected revenues.
The reason we withdrew any expected revenues, when I came back in and started to work in detail with the team in South Bend, who were a superb operational team, it became very apparent that they were rushing to deliver the revenues that we had in the market, and there was a disconnect between what we were forecasting to the market and what we were able to do properly to deliver a very, very high class facility in South Bend. So I took it on myself to say to the guys, what is happening? And I agree that I said we were making good progress, but what I didn't take into account is that, yes, the facility was completed at the beginning of September, but there's a 6-week verification and validation program that's needed, which would take us to the end of October, which we're in the middle of at the moment. I then looked at what it would take to hit the original 3 to 5 million revenue that was being in the market for the whole year. It it was impossible. There was no way we were going to hit those revenues. And the only way to deal with that was to say to the market, we're not going to hit those revenues. The third thing we said to the market, and this predate, you've got to remember all these questions slightly predate me, but the third question that I need to answer is that we also told the market that each individual fermenter would generate revenue, and we could validate and verify them individually and generate revenue. That, as it appears, was not the case. We need to validate and verify all 6 fermenters at the same time. Otherwise, it would have caused confusion and chaos within the facility. And the team that are on the ground there, who have been with us for some of them for 30 years, Cesar, who runs it, was telling me we have to do this properly and it takes time. So the information I was receiving wasn't the information that was on the ground. The further capex left is the overrun of cost has been significant. We got further capex of about $1.1 million, and it will end up being 16 million to complete the site from an original budget of 9.75 million. But again, the team have been informing me that that was never particularly the case. But that is where we will end. But we are very, very, very near the end now of any more expenditure that we have to do. Most of the capex now is fundamentally on minor building works and on downstream processing.
It's a question, it's on the same, I'll stay on South Bend, a question from the same investor who's asked about you referring to substantial revenue growth in 2024 for enzyme manufacturing services. In the past, the company has mentioned annual revenues of maybe between $10 million to $50 million, but your house broker in their forecasts are suggesting that these services would generate £3 million pounds worth of revenues in 2024, 5 million in 2025. Do you think that these are an acceptable return?
That's a fair question. Do I think they're an acceptable return? I would hope to massively overachieve that, but I want to get into a position where we grow that business in the correct areas. And I've mentioned this numerous times on this call. We've got to be focused on diagnostic and pharmaceutical enzymes. We've got to ensure that we bring them in, purify them, and make sure that we're a success in those 2 areas. And I do not want to make promises to the market that we can't deliver. Am I comfortable with 3 million out of South Bend next year? Well, you'd expect me to say absolutely. But do I expect more? Yes. But I want this to be managed in a very careful manner and make sure we have the right customers in the right margin. Also, with regards to respectable return, our intention is to move all our enzyme manufacturing from our rundown facility in Elkhart, Indiana, into South Bend, because we would have had to spend significant millions in Elkhart to bring that facility up to date. So rather than do that, we've built a brand new facility, which will also very much assist the ROI. And if we bring those in-house into South Bend, then your revenues are already looking at 7 or 8 million. But in terms of new revenues, 3 million is where I'm setting it now until we get. The other thing I would like shareholders to understand is we've got to get to make sure that this facility runs properly, what the returns are, what the yields are out of the fermenters, etc., etc. So I don't want to overcommit too early, but I would rather be in a position of pleasing the market than disappointing again. We cannot afford as EKF to disappoint the market again.
I suspect you won't be able to answer this question, but just relating to that, because you are over-promising or providing a forecast yourselves, but there was a question about how quickly you expect South Bend's capacity to ramp up, and can you express that in utilisation statistics? I think you just said there that your house broker has conservative forecasts, which you would hope to beat, and you can't really provide a forecast for that.
Not forecast for it, no.
Okay, there. Relating to the expansion of fermentation revenues, what are the business development steps that the business are taking to get more sales coming in?
We're bringing in a new commercial person to help drive the fermentation capability. We're massively increasing our marketing capability. We're obviously exploiting the existing customers that we have and making sure that we grow. We're obviously going to the likes of Roche and Sekisui, saying, what more can we do for you in terms of enzyme manufacture? And so we have a multifaceted approach to this. Believe me, it's, as I mentioned at the beginning, there's 4 areas of investment and growth, and this is definitely very high priority to us.
There's a question regarding the facility that you have, the 3 million and the additional 3 million from HSBC. Why do you need to have that in place? And is that to cover potential cost overruns?
No, it's to do with PwC. Fundamentally, PwC took every single negative forecast for cash that we could possibly throw at them. And we've always wanted to avoid any form of going concern, considerations, etc., etc. As I mentioned earlier, our cash generation is proved to be a lot better than in the worst case scenario for PwC. Do we need this HSBC facility? No. Are we likely to use a facility maybe up to 1 million, but we don't really need the HSBC facility, but this was just to make sure that we have no issues with PwC moving forward. It's as simple as that.
In terms of price increases, what extent are you able to increase prices?
We increased prices across the board earlier this year at 10%. Unfortunately, that averages out at 7%. I can hear everyone saying why. Unfortunately, we have certain contracts with certain customers that are long-term at the set price, and also with certain of the big boys, we have to offer some small price reductions for an increase. So, for example, small price reduction for Roche for a big increase in revenue. However, that will be offset by South Bend, which is why we did it, because South Bend will increase our margin significantly out of South Bend, evening that out. But on average, we've increased prices around 7%.
At the AGM, you talked about an Analyse of vets that was launched in December 2022. Is this one of the products that you no longer propose to do, or will it continue?
This is continuing, but it's not a product that is going to go into the tens of millions. It's when I announced at the AGM, we forecast selling 10 instruments in a year, and we've done 28 in a month. And it still sells pretty well. We're up at around 60 or 70 for the year, but it's not something that it's something we manufacture out of Leipzig. It's not something, we're not a veterinary business. It's similar with the lactate. We're not a sports business, so we'll be focusing on our scientific capability. But there is no need to discontinue it, and we will be carrying on doing that.
Are you still in the position where you have no long-term debt?
Yes.
Yeah, that was an easy one. How much of the overhead that you're describing is headcount? How much are you targeting for reduction?
Because of the nature of that question, I've got to be careful. A better way of saying it is, by closing Elkhart, we don't need 2 teams of operators. We'll just have the team from Elkhart working in South Bend. There are overheads in certain areas of the business that are COVID related, which we could take out. But from a professional perspective, I would rather be very, very careful how I answer that question.
Are you still selling products? Sorry, why are you still selling products in Russia, given that there's a high risk of payment defaults? I don't know whether that is the case. You need to answer that. But certainly the inability to extract the revenues.
Well, as I mentioned earlier, we are now able to extract 100,000 euros a month from there. Our balances have gone down. The other thing is that we own the facility we own 60% of the facility in Russia. We've never ever had a payment issue from there ever in the history, because we own 60%. We supply just tests into Russia for diabetes, and we did look at selling the business back to the 2 owners, the 2 other shareholders. And it would actually, the way the process works at the moment, we wouldn't have got 1 cent of our cash out of the business. So we're better off taking the dividend and continuing to run the Russian business. However, I will say that revenues in Russia will have dropped by next year from 4 million to under 3 million, and that is all factored into next year's forecasts.
Just, I guess you can only give rough ideas here, but do you have targets for gross margin across the business in terms of the medium term and how that might compare to peers? And there's also a specific question about what's the percentage gross margin that you would target for the life sciences business?
We would be targeting 60% plus for the life sciences business, and we should, over the next couple of years, get the point of care business back up over 50%. That won't happen, as I mentioned earlier, next year, but Steve is very much focused on increasing the margin because that's where the higher EBITDA will come. As I mentioned, in 2019, we did 45 million revenue and 12.5 million EBITDA, and this year we'll do 53 million and 10 million. So it doesn't take, it's very simple to analyse and say we need to do something about it, which is what we're working on.
Just three more short questions, I think. One is Mike Salter still working for the business?
No, he isn't. And by the way, can I clarify that? Somebody once said we didn't announce it and we should have. That is partially correct. Mike had stepped down as CEO, but it would have been prudent to announce it. And we were going to announce it in our interim results or end of year results. Sorry, we were going to announce it in our trading update earlier this year. But Mike then published on LinkedIn that he'd left the company. And so therefore, announcing it was no longer relevant. We didn't have to announce it from a legal perspective, but we were going to announce it as part of our trading update, but Mike announced it on LinkedIn.
So two more questions. The penultimate one, at the last presentation, you gave assurance to shareholders who were upset regarding Source Bio and what happened there, that you wouldn't allow the company to delist on the cheap. Is that still the case?
Absolutely. We're not. I'm probably going to get this question every time I present, but we are not delisting. We're not. We've got, I hope you can see from this afternoon, we've got a lot to deliver, and delisting is not even in my thought process. We're in a very good position. We want to build from here, in a strong position now, and I want to look forward, and there's nothing like that being considered on the board of EKF.
The final question is, given the outcome of what happened on Sunday night, who's going to win the World Cup?
Wales, of course, naturally. No, yeah, well, I'm a very, very happy man, and so is Paul, and so is Steve. You're three Welshmen around the table. And I think we'll get to the semi-final, but then I think it'll all come apart again. So there we go.
Julian, thanks very much. That's all of the questions that we have.
That's great, Paul. Thank you very much indeed, Julian. Thanks indeed, and wish you the luck for the game. Thank you very much for addressing all those questions. Of course, any other questions that do come through, the team will be able to review those and publish responses where appropriate to do so. Julian, perhaps just as a couple of closing comments just before redirecting investors to give your feedback, that would be great.
Yes, I just want to say, I meant what I said at the beginning. I know it's been disappointing. It's a year full of turmoil and difficulty and disappointment, and I do take that on board. I do take it personally. That's why I really feel strongly that we will deliver this business, but it's got to be done correctly, and it's got to be done in a sensible, strategic growth manner, and that's what we're aiming to do. And because we've now put the past behind us in terms of all the confusion, all the issues, the overspend in South Bend. And I think we have now reached a point where we can start to properly grow again from a post-pandemic situation. And, forecasting 17% increase in EBITDA next year gives you an insight into where we really, truly believe we can take this business. And so I think we've got an incredible core business in diabetes and hemoglobin and BHB. And then we've got the considerable potential upside of the fermentation. But we ask for time and patience, but we're also now from here, we'll start to deliver significant upside from where we are today. But as I say, I apologize for the turmoil and the communication and the changes that have happened over the last 12 months.
Fantastic. Thanks very much indeed, Julian. Thanks for updating investors today. Can I please ask investors not to close the session? You'll be automatically redirected to provide your feedback in order the team can better understand your views and expectations. This will only take a few moments to complete and be greatly valued by the company. On behalf of the management team of EKF Diagnostics Holdings PLC, we'd like to thank you for attending today's presentation. That concludes today's session, and good afternoon to you all.